Hello and welcome to Estate Edu with Atibame. In our previous videos, we discussed some of the tasks in estate management, which are valuation and property maintenance. In this video, we're going to be looking at financial management as one of the tasks in property management as well. Let's welcome our lecturer. It's no other person than Elder ESV Atibame Itan, the CEO of Atibame and Company. You're welcome, sir.
Thank you, Surveyor Aisha. We'll be looking at the financial management as one of the tasks in property management. Previously, we spoke about valuation and property maintenance as core tasks involved in property management. By financial management, we are talking about the processes and activities that are involved in managing the income, funds, and money being generated by the property. This money come in various ways, and so as the money come, so also it will be expended in order to maintain the aesthetics, the fabrics of the property, the longevity, giving it longevity, and then the safety of the property.
Okay, thank you very much, sir. So you mentioned severally generation of money to maintain property. Can we also refer to this money as finance? And if so, how do we generate this finance to manage property or any property in
We can
question?
look at finance as the money or income that is accruable from the property. And the second question is the sources. We have few sources that this money or fund comes from. One of the sources is the rent that is paid on the property, meaning that the property itself generates rent annually or periodically. And this rent that is generated is a source of income for the management of the property itself. Second source of the finance is the capital that the investor sinks into the property itself. An investor brings in part of his capital into the property for managing the property in order that the property does not suffer adversely where the rent is inadequate. Another source of fund for the management of the property is a situation where an investor obtains or a property manager obtains a short-term or medium-term loan in order to meet the operational needs of managing the property. And then lastly, there is also what we call service charge. This service charge is the money contributed by occupiers of the property in order to maintain the common services and facilities that are provided within the property.
Thank you very much, sir. In the source of income for property management, you mentioned rent. Rent, of course, is understandable to everybody, and capital investment as well as service charge. But you mentioned loan, like soft loan. How do we take loan to manage a property? And if so, how is the loan going to be paid back? How are we expected as a manager to pay back this loan?
Loans are obtained where the other sources of income are not meeting the requirements of management. The rents coming from the property are inadequate. The investor brings little or no finance, and the service charges paid are inadequate as well. And therefore, the reliance on loan from either commercial bank or any finance houses becomes inevitable. And therefore, loans are taken with some conditions and terms which are very negotiable, also favorable to both parties. And therefore, when it is taken, it is deployed into the management of the property in order for the property to maintain its economic value and all other goals associated with the property management.
Okay, sir. Thank you. Um, my other question is, having generated this fund through the sources mentioned earlier, how is the fund managed accordingly?
Right. In property management, there is what we call outgoing. Outgoing are the normal expenses that are incurred on the property in order for it to maintain its integrity. There are four aspects of this outgoing where the funds generated from the property are allocated. Number one, we have what we call operating costs. Operating costs involve the daily maintenance and repairs of the fabrics of the property. It also involves utility and amenities costs, and then it also involves uh, the cost of cleaning, clearing, and other janitorial services. That is operating cost of the property. So the money, the fund generated goes into that aspect. Secondly, there is what we call administrative costs. Administrative costs involve the professional fees paid to consultants and other professionals that are involved in property management, such as legal officers, accountants, and other professionals and consultants that are engaged in property management. Another aspect of the outgoing is the tax imposed on the property being managed. There are so many types of taxes that are imposed on the property. For example, the ground rent payable on the property being managed is a form of tax. We also have withholding tax paid on the rent payable or paid on the property. We also have stamp duties which are paid on the legal documents on the land, legal transactions on the land. Stamp duties are paid on them. And of course, we also have what we call uh, tenement rate, which is a rate paid annually. There is also a development levy and of course what we call land use charge. These are some of the taxes that are paid on the property, and a property manager is expected to be aware of these taxes as part of the outgoings on the property. And then finally, we talk about financial costs. Financial costs has to do with assuming one takes a loan to manage the property. This loan is to be repaid back with interest. So the financial cost in this regard involves the repayment of the loans taken and of course the interest paid on it. So these are the also form part of the costs, financial costs of the property. All these put together, we call them outgoings. They are necessary in order to help generate that the property maintains its economic value generation potentials. It's also necessary that the fabrics and the amenities and utilities in the property are properly
All right, sir.
maintained.
Well, I'm still curious. As a property manager, at what point does investors expect return on their investment on the property?
Every investor would have undergone or would have had what we call feasibility study and viability appraisal of the developed property. And this feasibility study and viability appraisal shows clearly the period within which the property is expected to meet its break-even point, meaning that where you have the cash inflow, there's also what we call cash outflow. Cash outflow has to do with the outflows we talked about earlier. And so there's no particular period that's designated that an investor will by this date begin to have the dividends or returns on his investment. However, we know that investors will have to wait until it breaks even, and beyond the break-even point, we will have been expecting to be receiving the returns on the investment. So, an investor has to be patient depending on the volume of amount invested and the period over which the property lifespan is estimated.
All right, sir. Thank you very much. As always, we appreciate your time. Well, there you have it. Financial management is very important. Management of your finance cannot be overemphasized. Make sure you subscribe, like, share, and comment. Leave all your questions in the comment section and be sure that we'll attend to them. Turn on your notification button so you'll be notified each time we drop our videos. Thank you and stay tuned.